I was warned against this phrase that you used, Honorable Mayor, Executive Mayor, of all protocol observed. I tried the trick and somebody said to me, it's either you observe protocol or you don't. If you observe it, you go through the salutations and make sure that you haven't left anyone behind. Or you just go ahead and just speak. But, ladies and gentlemen, thanks very much for the opportunity to address you today on the important topic of infrastructure financing for municipalities. And my apologies for not being able to stay over and not being here much earlier. When I came here, Deputy Minister Nel asked me, how did I get out of the cabinet committee that was underway? Did I lie that I'm coming to SALGA? Or am I coming to SALGA to lie that I'm going to the... So I'm not too sure. I'm at that point now where I also have to connect. I have a 7 o'clock meeting down in Cape Town. Ladies and gentlemen, we live and work within the boundaries of a municipality. How well a municipality invests and looks after its infrastructure, including roads, electricity, water, and other services, has a huge bearing on our quality of life. Also, since all economic activity takes place within the boundaries of a municipality, the quality of municipal infrastructure matters for the performance of our economy in general. Now, the Deputy Minister said here that we know the historical baggage that we still carry of migrant labor, of people spending their entire lives in the cities and then in December only be able to go to our rural areas. Now, I do that every week, so I'm not too sure what you were saying about me, because I'm in the city the rest of the week, but weekends I go back to my rural area. But the fact that we're gathered here, ladies and gentlemen, in search of innovative ways of financing municipal infrastructure is yet another reminder that all is not well with infrastructure that falls under municipalities. We know only too well of the backlogs in the building of new and maintenance of existing infrastructure. If we are to raise the pace at which our economy grows and eliminate the legacies of apartheid, we must fix our municipalities, in particular their ability to build and maintain infrastructure. National government, as we know, transfers more than 40 billion rands annually to municipalities to assist them fund their infrastructure investment. Of course, this is not enough to meet the infrastructure requirements, as we all know. So municipalities must add to this pot of money by increasing the share of resources that they generate on their own. I hope that this conference will help municipalities identify ways of sustainably raising finance to invest in this much needed new and the refurbishment of existing infrastructure. Investment by municipalities in the building of new and maintenance of existing infrastructure can contribute to faster economic growth. This faster economic growth, on the other hand, will also make it relatively easier for municipalities to fund long-term investments that are needed to improve infrastructure networks. Now, looking at the economic context, our economy has the potential to grow faster and more sustainably than it has done during the past decade. The rebound in confidence since December 2017 and the potential for increased investment in the replacement of capital equipment and other assets has set the stage for an improvement in growth. When the budget was tabled in Parliament in February this year, we projected that this year's economic growth will be at about 1.5%. And this was mainly on the back of the rebound in investor and consumer confidence. The contraction in GDP of 2.2% in the first quarter of the year, which we got a few weeks or a week ago, is a stark reminder that we need to move with a greater sense of agency in implementing the reforms necessary to raise the pace of economic growth and to ensure that growth is sustained over a longer period. Unless we implement the reform agenda to address the structural challenges that constrain our economy will remain stuck at the lower levels of growth. Government remains committed to implementing the structural reform agenda in a number of areas, which involves creating jobs through faster economic growth, improving the quality of education, skills development and innovation, and improving the capability of the state. If we implement this core agenda, we can ensure that all South Africans have an opportunity to participate meaningfully in the economy. Youth unemployment in particular remains very high at close to 60%. Our young people lack the skills that potential employers require to drive their businesses. But we also know that the cost of searching for job opportunities are prohibitively high for young people. Of the young people who have given up on searching for work opportunities, more than 70% said that the distance between where they lived and where potential job opportunities were was a big constraint on their ability to look for work. For those who do find jobs, transport costs take away up to 40% of the incomes of the lowest wage earners in urban areas. That is why we must redouble our efforts to change the special setup we inherited from apartheid. The cost structure of our economy also remains too high, making it difficult, for example, for small businesses to be created and sustained. Examples of these costs are broadband, transportation, and high costs of complying with regulation, and a number of others. But to ensure a stable platform for growth, we also need sustainable government finances. This, therefore, requires difficult trade-offs. If we do not contain expenditure, for example, we are going to spend increasing amounts on paying interest on debt. This is a requirement of our Public Finance Management Act, which demands that interest costs be deducted first before the budget is split amongst the three spheres of government. And I think any responsible person does the same with our finances at home. This therefore means that increased interest payments, which have been the fastest growing expenditure item during the past decade, will result in less money being available to pay for all other government programs and thus threatening service delivery. So strengthening good governance and acting against corruption is crucial to rebuilding the trust in government. This is also as true for municipalities as it is for other spheres of government, as well as state-owned enterprises. When citizens have trust in their government, they tend to pay their taxes willingly and on time. Trust in local government also results in greater payment for services. We are keenly aware of the constraints to growth, and we are therefore redoubling our efforts to enact reforms that will raise the pace at which our economy can grow, increase its productivity, create more room for competition by, among other things, lowering the cost of doing business. Assuming that the global environment remains supportive, National Treasury estimates that the effective implementation of reforms in areas such as agriculture, competition policy, telecoms, tourism, and others could actually lift the rate of growth to higher levels. Now, municipalities have a critical role to play in this reform agenda. The major contribution of municipalities to economic growth is actually, it comes in twofold. It comes in two fronts. First, it is the provision of urban infrastructure services, such as water and sanitation, electricity distribution, waste removal and disposal, building and maintenance of roads, and the provision of public transport. Secondly, municipalities contribute directly to the cost of doing business because they issue construction permits, they connect businesses to the electricity network, and they play a big role in the transfer of ownership of property. So when municipalities carry out this regulatory and administrative function ineffectively and inefficiently, they retard economic growth in the process. Now, the building of new and the maintenance of infrastructure talks to these contributions by municipalities and to economic growth. Our National Development Plan recognizes that the role that municipalities can play in creating an enabling environment for investment. This can be done through the provision of strategic infrastructure and land management that supports economic growth. Municipalities therefore need to mobilize the broadest possible range of resources to fund infrastructure. There are four broad sources of capital finance for municipal infrastructure. The first is grants from national government, second being public contributions or donations, and thirdly, internally generated funds, and lastly, borrowing. Municipalities must therefore maximize the use of all four. The focus of this gathering, I'm made to understand, is on municipal borrowing. And I believe National Treasury officials have already presented here today on the review of the policy framework on municipal borrowing and the conditional grants, as well as the reforms to development charges. I will therefore not repeat the detail of these topics, but rather try and speak to the principles that underpin government's policy on municipal borrowing. Ladies and gentlemen, government policy and legislation supports prudent and long-term borrowing by municipalities. This is an efficient and equitable mechanism to finance capital investment by local governments. We have indeed a sound legal and regulatory framework for municipal borrowing, which is codified in Chapter 6 of the Municipal Finance Management Act. This framework continues to work well for large cities. Last year, 2 metros issued bonds and both were oversubscribed, demonstrating once again the appetite of investors for financing local government infrastructure. However, several factors have changed since the MFMA came into effect more than 15 years ago. Hence, the review of the municipal borrowing policy framework becomes important. Let me discuss some of these factors. The first is that is because of the growth in investment needs. The infrastructure plans of cities are no longer limited to providing basic services to all citizens. Municipalities, especially metros, need to invest also in support of economic growth. And there are huge backlogs for the rehabilitation or replacement of aging infrastructure. The second is the clarity on the role of municipalities in driving spatial transformation. A 2010 Constitutional Court judgment made it clear that municipalities were responsible for spatial transformation of our cities. Government policies, therefore, including the NDP and the Integrated Urban Development Framework that Minister Nel spoke about, have emphasized the importance of reversing the apartheid spatial development patterns because they constrain economic growth and perpetuate spatial injustice in our cities and towns. Thirdly, the maturing of the municipal borrowing market. Metropolitan municipalities in particular can access capital markets to meet a significant portion of their investment needs. Long-term lending to municipalities has more than tripled since the MFMA was adopted. However, despite this progress, municipal borrowing remains below the levels projected when the original municipal borrowing policy framework was adopted back in 2000. Part of the reason for this is the surge in grant funding over this period. When the policy framework was adopted, it was expected that credit-worthy municipalities would finance most of its infrastructure out of their own generated or borrowed resources. However, even credit-worthy metros have continued to rely on conditional grants as the biggest source of funding their infrastructure. Lastly, the benefits of municipal borrowing have so far been concentrated in the metropolitan municipalities, which account for about 86% of all long-term municipal debt. The national fiscus, as we all know, is constrained. It is for that reason that Minister Nel said he can't speak on our behalf because we're too broke to even engage on some of these matters. But because of this constraint, credit-worthy municipalities must be assisted to look for debt markets and other revenue sources to fund a greater proportion of capital investment. This will free up a greater proportion of the infrastructure grant to be used to fund municipalities that have less capacity for generating their own revenues. Now, if you look at the state of local government finances, as they have to borrow against the strength of their own balance sheets. So I want also to take this opportunity to talk to the state of some of the local government finances in general. Information on municipal budgets and in-year financial performance is available for scrutiny by the public and investors. We are continually making improvements to the quality of the data on municipal finances through such initiatives as the new Municipal Standard Chart of Accounts. This commitment to transparency means that investors know they will have reliable information in order to assess which municipalities are creditworthy. It also means that the public has access to information they can use to hold municipal political office bearers to account. And over time, the greater transparency and scrutiny of municipal finances and other performance indicate information will lead to improved financial management by more municipalities. Government is also committed to supporting the turnaround of municipalities that are in financial distress. The Minister of Cooperative Governance and Traditional Affairs recently announced that 87 municipalities are deemed to be dysfunctional. In collaboration with National Treasury, COGTA will have now embarked on a program to support these municipalities to rebuild a foundation for sound financial management. Now, in conclusion, ladies and gentlemen, and brace yourself for another 2 hours, this conference provides us with an opportunity, or it provides an opportunity for the private sector and government, as well as other stakeholders, and when I came here, the DBSA was on the stage, to exchange ideas on how we can work together to reform the current system of infrastructure funding. We need to leverage municipal resources to build cities and towns that can put all our citizens to work and provide inclusive and dynamic spaces for all our people. Finally, I hope that government, the private sector and other stakeholders can work together to reposition our municipalities as core drivers of economic development and growth. Thank you very much.
All right, that was the Minister of Finance, Nhlanhla Nene, addressing the 3-day Municipal Financing Conference that's underway in Ekurhuleni. Now, we'll have more details on that story as the afternoon progresses. In the meantime, an index tracking transactional activity in the South African economy shows the value